Hey, everybody, welcome to another edition of the No Hype and Real Results podcast with Adam Boatsman. And the most important question for the day, Adam, is, did you call me or did I call you about wearing gray? We did call each other.
Muted winter colors.
Yeah, still feels that way.
Yeah.
But at least we're not dealing with storms. But we're going to talk about the storm-proof business, and we're going to continue on with that because this has been kind of a fun theme on this ebook that you wrote, and it's just real practical advice. Really, I think it's the stuff that we see over and over and over again, and yet a lot of times the basics are missed, and then they kind of keep people stumbling a little bit, or not at least running as fast as they could. Right?
Yep.
So we've covered a bunch of things, everything from cash reserves and tax credits that was kind of free money. We talked about timing differences on those things, owner fringe benefits, and really kind of then moving into buttoning up the operating agreement, getting alignment between partners and key people within the company. And now I think what we're going to do is we're going to talk about kind of closing the books and records accurately, stuff that, again, people are like, all right, well, at least I'm up and running. But these are things that really trip them up. And then the last thing will be just like, all right, some of the basics on having a clear process for onboarding new clients and the first 30, 60 days of a new client that you're onboarding, that really sets the tone. It's like first impression in many cases. So where do you want to take it?
Yeah. So on the books and records, and by that we mean, I'm closing my financial records monthly. Some people may think, well, of course you would say that. You're an accounting firm. You're just being shameless and self-promoting, in that sense. It's sort of like my cardiologist says that I should get some cardio, but I'm not going to die tomorrow if I don't. So I can totally get how this could feel that way. And when we bring up closing books and records, it's also not to discount that, including our own business, with a lot of our clients, I don't need a monthly P&L and a balance sheet to know how the business is doing this week or even this month. I mean, I kind of know what our payroll is. I know what our rent is. I know how much invoicing and collections that we need to have to be able to support that infrastructure. When it comes to, big picture, where does this really fit in? Do I need it? Do I absolutely need it? Like, why is it an essential? Why is it a foundational element? So I'm not going to discount I mean, there are a couple things, and we'd encourage every CEO to know, what are the couple things that if you're on a desert island, you could run your company from. And most of them are not going to say a detailed profit and loss balance sheet and cash flow statement given to me 15 months after the month close. It's going to be something that came from that, potentially. So the reason that we put this here, though, is there's so many negative consequences from not having it that it's just, for us, based on experience, it just makes sense to, hey, it's so easy to get right. Why wouldn't you just want to get it right? Knowing all the things that are wrong, if you don't. And we'll start with the most basic of wrongs, which is, at the end of the day, once I get beyond, 5 or 10 people and I actually need somebody that's not me to potentially be managing the financial records, someone could be stealing from me and I don't know it. Unless I'm getting my financial statements and those financial statements, I know how to read them and they actually make sense to me, I don't know if somebody's stealing from me or not. I wouldn't know, and I need to know, even if I'm getting those records, because we had a lot of clients that have gotten those records but don't know, but still couldn't tell that they're being stolen from, it's because they didn't know the 2 or 3 things to double check. to make sure, like,
Yeah.
well, I'm getting financial statements, but my bank account hasn't been reconciled in 3 years.
Mm,
I'm getting financial statements, but there's 3 people on the payroll that I don't recognize. I'm getting my financial statements, but who are these vendors we've been paying $5,000 a
right.
month to, right? Like, these are all things that have legitimately um, happened. I'm getting my financial statements, but why is my receptionist putting spot treatments on the corporate credit card? Like, these are all things that have happened to our clients that just, because they weren't insisting on a proper close process. Which even then, I mean, how much that add up to? You know, do I really want to spend the time on all that, Gary? When I've got better things to do, and it's like, I don't know, man.
Mhm.
When you start getting into like 20, 30, 40, $50,000 a year, and then you multiply that times a multiple, if you're getting
Right.
7 to 1 EBITDA, upon an exit, it's like, yeah, you saying you don't got a couple extra minutes, to kind of
Yeah.
learn this stuff and go through it, just cost you a couple $100,000. And it's like, well, now you've got my attention. Like,
Yeah.
I don't care how big you are or how rich you are, a couple $100,000 is meaningful, to just about everybody.
Yeah.
So I think, that's really one of the core reasons why we think that this is important. The second is like, look, if I don't have something, if all I have is this, it's the only thing. In other words, like, I don't know whether a couple things are going to tell me whether I'm doing good or bad or not. Like, I can't.
Yeah.
This is all that I've got is my diagnostic tool to figure out where the problems went. Which usually show up as, I think I'm doing really well, but I'm not making any money, or it's not showing up as cash in the bank. Well, your profit and loss in your balance sheet are going to give you a treasure map, to tell you exactly why that occurred. Because whenever someone says that to me, like, either I'm doing really well, but I don't feel like I made anything, or
Yeah.
instead I say to them, you did really well. Here's how much you owe in taxes. And they say, that can't be true. I didn't make anything. um, the P&L on the balance sheet or the roadmap, because there's only so many places that cash can hide. It either went in your pocket, or it went to go pay debt, or it went to go buy some stuff, or, your customers haven't paid you, or you buy too much inventory. Like, there's only so many places where um, cash can go and hide out. And the only place that you've got as a roadmap is your profit and loss and balance sheet, to determine that. So that's the second really core reason why we think this is crucial, is because it's the only thing it's the only diagnostic tool that you have. It's sort of like saying, like, I'm going to live my life without ever getting a blood test, or a physical.
Right.
I'm going to manage my health by gut, Gary, screw the colonoscopy. I'll know, when I've got a I'll know when I have a non-cancerous polyp, like, you don't know that stuff. That's why you get the diagnostics done. This is the only diagnostic tool that CEOs really have. That's the scorekeeper of how they're doing, is their financial records. That's independent of, like,
Yeah.
and I swear I'll stop riffing here in a second so you can say something.
No, it's
But
good.
it that's independent of, let's say that I finally hit I finally got the brass ring. I'm ready to sell the company. I built something really successful, and I'm ready to go through the process. And, hey, I'm going to need a P&L and balance sheet. Oh, wait a minute. It's going to take me a couple months to get that caught up and created for you.
Right.
You know, and that's a problem. And equally as bad is, you know, if you did everything right, um, in that scenario where you're going to sell your company, so, like, on day one, hey, let me get your profit and loss balance sheet so I can give you a letter of intent. Here you go. I did a Herculean effort to get them caught up. Well, if you did everything right, maybe you're going to close in 90 days. But guess what? They're going to want to update your financials. you know, and what do you think happens when you say, I can't get those to you because I don't have the time to get them caught up. They're going to assume that everything that you gave them before is fraudulent. You know, in other words, like I've never had anybody that actually closed on their business that didn't ultimately have to provide current financials as part of the closing process. And 0 times did a buyer come back and say, "Hey, Gary, I know that you were under a lot of duress, getting through this. And, I know you couldn't give me the financials when I asked. But when you did finally get them to me, they looked so good. I decided to give you extra money." It's always the other direction.
Yeah.
It's always, "Oh, well, this is going to be a problem. Oh, well, this is going to be a problem. Oh, well, this is going to be a problem." Like it's never like it just, again, there's so many downsides, relative to the limited effort associated with the upside.
So I'm going to roll back the tape a little bit. And you've got to the point where, all right, I have a possibility of exit. Let's go back to the opposite end of that spectrum when somebody is getting started. And that's not necessarily our core audience, but it happens, right? So somebody starts, they're just rubbing 2 nickels together, hoping to, get some sparks going. They get it going. They realize, hey, I'm good at this or that service, or I've got a knack for selling these widgets or whatever. But a lot of times they're not finance people. And so, hey, I need a bookkeeper. I need somebody to help me set this thing up. Or they try doing it themselves and they don't really know what they're doing, but they're afraid to talk to somebody. Or they just go with the cheap alternative. Let's talk about what that problem becomes, because we see it a lot. And it's not just small little companies. Sometimes we see bigger companies by the time they get to even $20-30 million at times, and it's a nightmare.
Yeah. Well, if I just take this will sound self-serving. I can't do my job unless I've got your financials. So like, even with the startup, if you can't tell me accurately what you think you made before I start doing the damage from a tax planning perspective, we're flying blind. Like I don't,
Yeah.
like
Yeah.
I could be over prescribing or I could be dramatically under prescribing if I don't at least have a good starting point, independent of like any other financial advice that I might give you. So for example, like if you are a startup, you never run a business before, you don't really know how many people you need to accurately run the place. So you start hiring like a drunken sailor. Like, wouldn't you like your CPA to tell you, "Hey, dude, you're spending too much money on labor relative to a business your size"? Like the only way I'm going to know that is if I have information available to give you. And I think, when you look at the scenarios that you described, you know, I'm not an expert at it, but I really can't afford to hire anybody
Yeah.
to do it. What I'd say about that is that if you're willing to learn, some of the best bookkeepers that we have didn't know anything about it, but they were willing to learn. So I think
Mhm.
if you're willing to learn, most businesses up to, a certain size, which certain size would be in the, 20 to $30 million range. I'm not talking like 500 grand.
Right.
Most businesses, I could be competent at the bookkeeping and do what I got to do in 3 to 5 hours a week. But you just got it. That may not include invoicing customers or paying the bills, but at least keeping the books and records, reconcile the bank accounts, stuff like that. It's 3 to 5 hours a week. It's like, but I got to stay on it because if I don't stay on it, it backs up. And now all of a sudden I'm looking at days, to get stuff caught up. So that's, that's if you're the do-it-yourselfer. I think if you've outsourced it, but you pick the cheap alternative,
Yeah.
then it's sort of like same problem if I'm flying blind. I don't have anything that I can count on. Therefore, it's not worth the sheet of paper that it's printed on. And I have all the same problems that I just, described before.
Yeah. Yeah. And we've seen that. And especially if all of a sudden the company has exponential growth, man, oh man, have we seen issues.
Yeah. Yeah. Another one that I'd hit on too that, that's a little bit related to the company sale is that Well, yeah, actually two more things that I'd talk about that are very similar to the company sale. If I, you know, if I all the time clients come to us, like you've seen this as you're bringing in clients. Oh my God, what if I get audited? Is this a red flag? Is this a red flag? And our answer usually is bring it on. you know, we don't lose. Well, the caveat to that is if your financial statements are reliable, I won't lose.
Yeah.
Because the way that the IRS audits is actually very similar to how we would recommend that you close your financial statements. You make sure that your balance sheet is accurate. Therefore, you've only got one variable. It's called net income. Now we're just debating whether or not that was a deductible expense.
Yeah.
I will win that fight all day long. But if I can't rely on any of your financial records, period, like your bank account hasn't been reconciled. So I'm like, well, what are these 5 deposits? Were those income? Were those loans? What were those? Because IRS is going to say there was income until you tell me differently.
Mhm.
Oh, they were loans. Well, from what bank? You know, S- I don't.
Bank of me, myself, and
Yeah.
I.
Okay. Well, then show me where it came out of your purse. You see
Right.
where this never ending thread, gets pulled down that makes the audit very difficult. Same thing would apply. Like, hey, I want to go get a loan. How's business,
Sure.
Gary? You know, oh, business going great, Mr. Banker. Cool, man. Well, send me over your P&L and balance sheet, and we'll see if we can do that loan for you. Ah, no. I just told you it's doing great.
Trust
Can't
me.
trust me. Sales are up 40%. Can't you increase my line of credit? No, I cannot.
Yeah.
So the more buttoned you up are, the more reliable you are and more trustworthy you are to the use of those financial statements, which for most of our clients are going to be bankers and then bonding agents if you're in construction.
Yeah. One thing that I thought would be helpful, how many times have you seen somebody kinda actually drop their guard and go, "Adam, I really don't know what I'm doing." Um, can you explain to me, like, what a P&L and a balance sheet is? Have have you ever had that happen to you?
Um, that happens all the time. So
Yes.
I would say, of our client, if you're a client, so apologies if you're not the client that I said this to, but if you're a client and I say to you, Gary, I put you in the top 10 of our financially literate clients, meaning like you really understand it, like you're on top of it,
Yeah.
you're asking the right questions, you're on it. I really mean it, because you are. But even some of those people would say, I don't really know what I'm talking about.
Yeah.
But everything beyond sort of the top 10 and the top 20 falls off dramatically within our client base. So if you're someone listening to this and you're like, I don't really know what a P&L and balance sheet is, or I never want to look at that, I'm not an accountant, you're in good company. Like a lot of other people feel that way. That's why we put it as a foundational item, is because it causes so many problems down the road if you don't get on top of it. I mean, one of my favorite stories, that actually was one of my top 10 financially literate clients. I'm not going to name him, but if he listens to this, he'll know who he is by the story. But we were sitting at the Kilt of Buffalo, having a beer, and he was talking about his cash flow. And I said, your inventory is too high. Because I mean, I looked at his balance sheet and I knew his financial statements were relatively accurate. I said, you got too much inventory. It's like, what do you mean I have too much inventory? I said, well, you make a lot of money. If you then turn that cash that you made into inventory that you can't sell,
Mhm.
that's where your cash is at. And this guy had like 6 months of inventory
Oh,
on
wow.
hand, which, he was just trying to get to 60 days. I'm like, dude, you ought to be trying to get to 15 to 30 days. And he's like, well, how do I know how many days I have? No one had ever
Mm.
taught him how to calculate inventory days. So I said, get that cocktail napkin and a pen and write this formula down. He wrote no one had ever showed him. He wrote the formula down.
Yes.
So I'd say a lot of it really just comes from they don't know what to look at. And the people that they have doing the job for them don't necessarily know what to look at either. They're just record keepers, therefore, so you'll hear from like, nobody ever takes the financial statement seriously. You're not really telling them anything meaningful. This person's controller had never said, we have too much inventory and I can actually quantify the overage,
Mm. Yeah.
until we ran through this formula together.
Yeah, I think that's really good. So I'm going to put a pin in this one and just an accentuation point, and that is humility is required.
Yeah.
And it's extremely freeing to say, I don't know. Can I trust you? Can you make me not feel stupid and teach me?
Yep. That's right.
And quite frankly, not everybody will do that because there are people that like using leverage and highbrow, I'm smarter than you in our industry. I hate saying that, but
Yep.
I hope they aren't working here. I don't think that we've screened pretty hard for a low ego, but nonetheless, it's funny. There's a guy I was coaching, and at the time, I think his company was maybe 26, 28 million. Young guy. And he had gone to his mentor who had built a $1 billion business. At least he had a good mentor. He was a young guy, but he asked him, he goes, I don't know anything about a balance sheet. I don't know anything like that. So he had the humility to ask, and he was taught to where he actually did know. But when I was talking to him initially, it was taking him 3.5 months to get his financials from the 3.5 months ago, 3.5 months to close. And I'm like, dude, do you spray paint your windshield black and then drive down Highway I-77 at 90 miles an hour? No. Well, that's what you're doing financially. You are going with a windshield that's blackened out because you and all you've got is a rear view mirror that's 3.5 months old. How do you function? And I said, he goes, well, how fast should it be? I said, well, more like 5 to 7 business days. That's where you really want to be, ideally. The faster the better, but there's a point where it doesn't make sense. Like you're going to kill your people to try to do it faster. It just can't be done. But being able to trust your numbers, to your point, understand what your numbers are, have the humility, and ask somebody that knows and that can speak English and that you actually understand before you shake your head yes.
Right.
Those are some pretty basic things. Kind of while we're on that, and this may be off topic a little bit, but I think it's warranted. Because a lot of times, not, great entrepreneurs that weren't finance people, their kind of eyes glaze over when you start talking numbers other than, am I winning or losing? Do I have more money in the bank or not? Like, they keep it kind of simple. They think that they've got a CFO. Usually they don't. Talk about the difference between kind of a record keeper, a bookkeeper, a controller, and a CFO, just to help kind of level set so that they really understand what they actually are dealing with.
Yeah. So if I start with the base level, like I've really got a bookkeeper.
Yeah.
That's generally somebody who's going to have the capability of reconciling a bank account, reconciling credit card statements, generally is going to post things into the right categories, and can pretty well follow an instruction manual. If you take a step up from there and have a controller, that's typically going to be somebody that can do everything the bookkeeper can do. Plus, meaning you could still have a bookkeeper and a controller, but where the controller is going to bring value is that, they should be able to help establish a budget and be helping you to see variances against the budget. And then also where something is, an estimate or subjective, like, if you're a construction client, what's my construction in progress, which is my method of revenue recognition. Anything that how much should I have reserved off for clients that aren't going to pay us a bad debt? Like things like that have an element of judgment, still history, but have an element of judgment to it. Your controller should be able to handle those items, pretty easily. And then when you get up to and also some basic process improvement, like, hey, we could be using purchase cards instead of, expense reimbursements, all that kind of stuff, like some basic, hey, how can we make life easier type stuff. The CFO role, which it's rare that people truly have a CFO.
Yes.
When I think about that, it would be somebody who can do, kind of multi-year modeling into the future. Somebody that can help my lines of business do some sort of interpretive analysis. So in other words, like, who are my most profitable customers?
Yeah.
And what are we doing about that? Somebody who can help out, hey, Gary, in your line of business, I noticed that your labor ratio is getting off. Like, what's going on there? Like, it seems like you had a little efficiency drop. Like, someone who can do some more diagnostic interpretive analysis, and then also can do some more multi-year modeling. And at the same time, would also be somebody that I'm totally comfortable having lunch with my banker and representing me, or, hey, if there's a diligence call on a transaction, I'm cool with this guy or gal representing me. I'm not going to have to dive in and save them when it comes to the financial interpretation component of the business. That's really going to be more what the CFO type person does.
Yeah, I would agree with that. And you said most people who have a CFO, they really aren't CFOs.
No, it's someone who's occupying the controller or the controller bookkeeper seat that just happens to have a title called CFO, but they're not doing CFO stuff.
Yeah. The other thing that I would say is, for somebody listening, controllers can be expensive now, and CFOs are even more expensive. If you can't justify a full-time person, there are alternatives called fractionals. And I think about Tana Green. She had 10,000 employees, and she still had a fractional CFO, and he was actually a very good fractional CFO. But you can run a good-sized company even at a fractional basis. I'm not saying, and it depends on what the company is.
Right.
It really does. Hers was not as technical as, a manufacturing company where you've got really tight tolerances, a lot of inventory, a lot of breakage that happens depending on what kind of manufacturing, et cetera. But I think that as a non-financial guy, having a good CFO should be probably the most strategic person in the building besides the CEO.
Yeah, I buy that. And to echo your point, if you look at the population of CEOs at the Fortune 500, while it's not a majority, the highest population came up through the finance ranks.
Yeah.
Followed quickly by operations. So it just kind of shows you, like, when you've got somebody really good that is strategic, that's actually where the highest population of Fortune 500 CEOs comes from, followed closely by operations.
Yeah, it makes sense.
It's funny, sales is the lowest.
Really? Yeah.
Yeah. In our size clients, it's usually the highest, but in big boy world, in adult land, it's actually the lowest.
That's funny, because when I was working with Sherwin-Williams, the guy who was the CEO came up through the sales ranks. and he was really good when he was dealing with a lot of lawsuits from lead and all kinds of stuff. And, but I can understand why.
Yep.
Especially a publicly traded company.
Yeah.
Woo.
That's right.
That's a whole nother level. But thank goodness we're dealing with privately held. I like privately held much better anyway.
Right.
So anything else that you would add to this particular?
No, I think you kind of hit on the roll. It's like, what is it? Don't be penny wise and pound
Yeah.
foolish. I mean, it really comes down to like the role really ought to pay for itself. Um, and either based on you freeing up your own time and doing something with your time, if you're the one doing the role, if better access to credit, higher multiple upon exit. I mean, I've never seen the role not pay for itself.
Yeah. I'll just put another little point of emphasis on this. This is an example where we screen pretty tightly on who's the right fit for us or not. And if they're too small, my biggest concern is that you can't justify our fees for the size of the company. And this guy had left the military, and that's what I was telling him. He had bought some franchises, and they had a little bit of money to deal with, but it was kind of still starting. And I said, "Man, I'm concerned that we're just going to be too expensive." And I had a couple people teed up for him, and he goes, "Listen, my dad always said, don't skimp in two places. Don't skimp on the accounting, and don't skimp on the legal up front."
Yeah, fair comment.
And he said, "I'm going in."
Yeah.
And not everybody can do that. Not everybody will do that, but we've seen it so many times, Adam, where, it was kind of winging a prayer to get something airlifted. They got it off the ground, but then very, very quickly they were in over their heads with whomever they had, as
Yeah.
their brother-in-law or somebody that they were trusting. And before you knew it, you can pay me now, you can pay me later, but if you pay me later, it's going to cost you a lot more. We've seen that, especially in construction type companies where they've got a lot of subcontractors, a lot of ins and outs. I can think of one in particular that it took us 3 years to get them truly clean. It was such a hairball.
Yeah. Yep.
And it was extremely expensive for them to do it. They were saving a little bit of money on the front, but even if, find somebody that can speak English,
Mhm.
that you can relate to, that you can let your hair down and say, "I don't know what I'm doing," and that they can explain it and get you some quality people, even on a fractional basis. You don't have to have the full staff. Just have the basics covered until you're running, and then you can staff up as you need to. But in this world, especially post-COVID, you've got so much in a fractional workforce that's available, and AI can supplement a lot of things too. Like, it won't necessarily get everything like that straight. You still need somebody that is competent. So, I think that's a good place to end that section of it. Unless you
Cool.
got anything else.
Yep. All good.
All right, let's go into kind of some of the basic blocking and tackling of what we've seen where somebody wasn't paying attention to their processes, thinking through, well, what's this really like besides, hey, I sold you something, product or service, but they're really not thinking through what that experience is. What's the next step? That's just like, woo, got something sold. Let's talk about some of those things where we've seen mistakes made and where we've seen remedies or people that have actually done it right.
Yeah. If again, why would customer onboarding be a foundational process? It's because it really sets the tone of how the relationship is going to go. When you've got, like, again, everybody gets excited about the sale, but if you've got a leaky bucket because your customers are dissatisfied or not renewing with you, then it's like, well, what was the point of the sale? Like, I had someone say once, why would you drive past 9 customers to get to the 10th prospect? Go see the 9 customers. So it really, that first experience kind of sets the tone with people. And if I just think about, like, okay, what's the example of the best practice, right?
Yeah.
Well, somebody decided to switch to you and had a great experience, and then they give a review or they tell a friend. Like, oh my gosh, that's a layup,
Yeah.
you know? Um, Someone had a good experience right with the onboarding, so it's like all of a sudden it's like you haven't screwed anything up, and instead you foster goodwill, but then you found 5 or 6 expansion opportunities. Hey, by the way, once I got in here, I found that you needed X,
Yeah.
Y, and Z. Like if you think about like again, it's something as simple as going to the auto mechanic. It's probably a bad example because I wouldn't had paid the money anyway. But you know, I dropped the car off to the auto mechanic and they say, "Hey, I may or may not be able to get you in. I'm really busy. Do you need the car back?" No, it's okay. Well, it might be a little bit. And then I don't hear anything. So then I'm chasing the mechanic.
Right.
You know, chasing, chasing, chasing. Finally, it's like I wear the guy out. He finally decides to look at my car, and then he doesn't get back to me. And then when he finally does get back to me, he says it's one thing, and then later he says, by the way, there's a couple more things that you're probably going to need to want to do too. What are the odds that I'm actually going to say yes to that guy?
Right.
I'm going to say, give me the car back
Right.
and I'm never going to see you again. Versus you could sort of imagine how the opposite experience, would look like.
Yeah.
I'm signing up for everything that person had to say because they were trustworthy. They honored their word. They made a very fearful decision that I made in terms of trusting them with my car in the first place. Very safe, and secure. And it's like, where do I sign up for all that ridiculous stuff that you told me to buy that's now worth more than the car, but that's okay because I trust you and you're gonna make it all okay, right? So like that's the upside of doing it really great. I mean, I remember, something that we used at BGW that was related to actually a wealth management company that signed up one of our clients.
Oh yeah.
And unfortunately was not, our affiliated wealth management company, but the guy's name is Neil, and I saw what he did from an onboarding experience, which was basically to he's with Wells, and he exposed the client to everything else that Wells had to offer
Mm.
in the first couple weeks
Wow.
in a very salesy way. It was like, "Hey, you're gonna want to get your estate planning taken care of. Let me introduce you to this guy.
Yeah.
Thinking about selling your company? Let me go ahead and arrange a conversation with our investment bank so you can at least kind of understand what they do for when the time comes. You're thinking about doing some charitable giving? Let me set you up with their donor advised fund people. So you
Yeah.
can hear more about what, like in a very educational. You've got some stuff that you need to get. And where I kick myself is like, well, I knew all that stuff too. Yeah. Right. Yeah. Yeah. Was I having the conversation? It's my client that referred to referred to him. Like that was a gold chip onboarding experience that I just witnessed there, which was,
Yeah.
hey, welcome aboard. Let me walk you through everything that you might need at some point down the future. No pressure. Don't need to buy anything. I just want to make sure that you're educated and you know what is available. I mean, what better time to do that than when they're than when they're brand new, You sign up for somebody, you do a check-in, after 30 days or so. It's like, "Hey, let me just make sure that this stays sold." They're not
Yeah.
having any changes at heart or making sure that, we didn't screw something up out of the gate and, like, not fulfill on the promises, that we made. I mean, it's all stuff like that that makes where you're really just saying, "Look, it was great." I don't know, like, if I was dating somebody, it'd be the equivalent of like, "Hey, we had a really great first date. The relationship is progressing. I happen to have a lot of fiber with my meal, and I need to go use the bathroom. Am I really gonna keep the door open?" Like, like, you know, no, I don't want, I'm still in good impression. Like maybe I never do that, right? But I'm in good, like I need to keep the first impressions going.
Yeah. Yeah. That's funny. I can't get that visual out, but it comes down to a basic thing, which is treat somebody like you want to be treated.
Mm,
golden rule is still gold as far as I'm concerned. And it's overlooked many times because I think if we get really honest with ourselves, we're thinking about ourselves and not them.
Right.
You know, if we think about our clients and our customers and we put them first, yeah, everybody has to make a fair profit. I'm not saying give away the farm, you won't be in business.
Yeah.
But making a fair profit and serving somebody well and just keeping that in mind, and then even asking for some feedback, like, hey, where can we improve?
Well, who loves this one, Gary? I mean, a lot of our clients also have separate sales and implementation and delivery team.
Mm-hmm.
Well, I don't know what sales told you. We don't do it that way.
Yeah.
I don't know what sales promised. They always make promises that we can't deliver. I mean, who likes to hear that?
Right.
You know,
I just made a bad decision.
like basically, you're just rubbing my nose in the fact that I made a bad decision that's going to cost me an unbelievable amount of money. But now I'm pregnant, But you know what? I don't have to have a second kid with you.
Right.
So you want to leave the person without having any regrets, because otherwise it's just creating um unforced errors. Like, you didn't that didn't need to happen. Like, that's so easy to fix, is that handoff in first 30 to 60 days experience, just to make sure that it's really a gold, it doesn't matter what you do, making sure that it's a gold experience instead of a womp, 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 wah,
Yeah.
type of experience. It makes all the difference in the world, again, in terms of making the customer sticky. And again, the reason we put it the foundational element, it's like, because if you look at most businesses, us included, they always think, I need more sales.
Right.
A lot of times the reason that they need more sales is because they have a customer churn problem
Right.
that they haven't addressed.
Yeah.
Which could be years down the road service problems, but more often than not, the relationship just starts bad and you kind of never recover from that,
Yeah.
until your competitor comes along.
Well, all you've got to do if you've got a product, especially, or a service, but especially product, go to Trustpilot. Trustpilot gets anonymous feedback, and if you see somebody with low stars, because there's a lot of schlepping going on online where there's no human interaction, go to Trustpilot and you'll see those that fulfill their word and exceed expectations, or at least meet them, or those that set up expectations and never follow through.
Fair enough. I've never checked that. Hopefully we have good reviews.
Well, Trustpilot, that's where I go for all my major purchases.
Got it.
So my ice pod and all that kind of stuff, like, because there's a bunch of pop-ups, doing stuff. And so I'm like, yeah, so a lot of them are sourcing from the same places, but are they going to pick up the phone when you call them or whatever? It's another thing that's interesting. This is something that we've tried to do, and we're not perfect at it. We're still trying to get better. But we've taken experiences that we've had, because a lot of us have been business owners, and said, what were the things that drove us crazy or that just didn't happen? A lot of times, and we hear this from other people that come to us, yeah, I never knew who to call for what. I was getting passed around, and kind of well, I don't know what sales told you, but, we don't do it like that. Those kind of interdepartmental kind of fiefdoms and turf wars so we're like, all right, let's do this once somebody signs up, because they pay a little bit more for us a lot of times.
Yep.
But we want to deliver a higher level of service and no hassle, so we'll get the entire team. It's not like, oh, well, I can't ever get a hold of Mabel, because Mabel doesn't return my calls, or Mabel's always on vacation or whatever. No, you actually have a team. And we get people to talk about their story. So our entire team hears their story. Why did they come? What were the hot buttons? Don't dance in that minefield, Okay, let's make sure we got that. And we let them know these are the people you need to call for what. And we follow up afterwards with, hey, here's a sheet. Here's who you call for what. And then you're going to have next steps and follow through. And it's really interesting. some guys that came to us that have an AI company. They had been in the same very, very large company, and they'd been Big Four accounting firms before in the technology space. And they came and said, "This is the most incredible onboarding experience we've ever had." I said, "Oh, really? Are you serious?" And they're like, "Yeah. Can we learn from you? Can we follow your process?" And yeah, heck yeah. It's like freely given, freely received, right? Or vice versa. But um, I think that is the point. Make it easy.
Mhm.
Do what you say you're going to do, and maybe just a little bit more. I mean, the bar seems to be really low right out there right now. So you could be a superstar and not really have to be a high jumper.
Right.
So, um, anything else on kind of that basic, whether it be onboarding or something else, where you see it being a foundational thing that a lot of people keep stubbing their toes on?
No, I think, again, I'll just, reemphasize the point. It's like a lot of, times when people make a decision, well, actually, here's one of my recent favorites. Hopefully this guy isn't listening to this podcast and doesn't burn my house down. Um,
Just don't use names.
yeah, I mean, people don't, we, so I got a recommendation from a friend of mine on taking down some trees, which
Ah.
is awful
Yeah.
for anybody who's had to take.
Got to pay a lot of money, and
Yeah.
all you look at is a barren place.
Oh, I know. I mean, it's buying tires on steroids in terms of the enjoyment of the experience. This guy comes over and, you know, talks a good game. We sign up with him. And then the day arrives and he doesn't show up. And now we're chasing him, but it's like, well, we've already made a decision. I don't want to call somebody else at this point, so
Wow.
we follow through. But then we needed some more work done. And it's like, well, we're already pregnant. So let's have him do it. And it's like, but I'm never calling the guy back and I'm not recommending him for anything.
Yeah.
So then we also got some landscaping done and, we're describing because the guy that did the trees also does landscaping and we did not use him for it.
Right.
So guy number 2 shows up who is going to do some landscaping for us. And we're sharing the tree experience. He's like, oh, there's so many bad people, out there, da, 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 da. Guess who doesn't show up for his prescribed?
Really?
And like, we're chasing, so who's not getting a call back there either. So just,
Yeah.
it's like a lot of, and yet imagine what would have happened if I had opposite experience. How many people that I would have told
Yeah.
what a great experience it was, if they asked, for a recommendation, or even if they didn't ask for let me, you need a tree down, let me tell you, I got a guy, versus I'm not going to say that now. And that all came down to not making a very good first impression, but I didn't do anything about that as the consumer because I was already committed to the decision itself. But what I was also committed to is I'm never calling you again. Like the second this transaction is done, we're done. There will be no repeat callback. Yet I've got one of the only tree lots still in Davidson. So like I'm going to have other things that need to be done, right? But it ain't going to be with this guy.
Interesting. Well, it's funny, the universal thing. So we talk about the big 4 reasons CPAs get fired. What's the number one, Adam?
You don't call me back. Yeah.
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 Lack of responsiveness or proactivity.
Yeah. No, it's funny.
The bar is low.
Well, and we get so bad about this time of the year too. Like I literally just got an out of office reply from another accountant in a different firm that said, due to the high volume of emails that I receive right now, I'm not going to get back to you for a week. And I just think,
Wow.
we oftentimes say that there's no such thing as an accounting emergency, but I mean, like most of my decisions I probably need in like less than a week time. I mean, geez, like you couldn't figure that out, geez.
I actually love it because it's like, it makes our 24-hour turnaround time seem like we're jumping 10 feet high and we're just clearing a curb.
Yeah, that's right. That's right.
All right, this has been fun, Adam. Thank you. And I guess we'll tee up another section of this book coming up next.
That's right. Employee onboarding and offboarding. So same thing. So
All
thanks,
right.
Gary. Appreciate it.
Sounds good. Thanks.
All right.